Hello and welcome. Today, I will share a technical analysis study we conducted on the DAX Index. In this analysis, we examined the historical movements of the index using various technical analysis tools and attempted to predict its potential future movements. In this educational video, you will see the step-by-step process of our analysis. Let's get started. Firstly, let's take a look at the historical price movements of the DAX Index. By evaluating various formations and patterns on the chart, we tried to predict future price movements. We utilized different technical analysis tools to determine the potential direction of the index. Before we dive into the formation analysis, I'd like to ask for a small favor. If you're finding this analysis helpful and informative, I encourage you to subscribe to our channel and hit that like button. We analyzed important points on the chart to identify various formations. We examined patterns related to the formation of specific dips and peaks. These patterns helped us understand the index's past behavior and its potential future movements. As you can see, we have a double top formation here. This formation strengthens the possibility of a downward reversal in the index. When professional traders spot this formation, they prepare to sell rather than buy in the market. It is a signal that indicates a potential shift in the trend and prompts traders to be cautious about further buying actions. And the index starts to form consistently lower highs. Keep in mind that each of these peaks and troughs represents important resistance and support levels. And now, the index has formed a new double bottom level. However, it is important to note that even though this can be a signal of a trend reversal, it is still too early to engage in upward trading. We will learn how to enter such a trade in this manner. Please make sure to watch the video without skipping ahead. As you can see, the double bottom formation has been violated to the downside and failed to hold as support. However, remember that double bottom levels also indicate the exhaustion of the prevailing trend and suggest that new lower lows may not be formed in the future. Therefore, the violated double bottom formation should still be considered as a potential signal for a reversal to the upside. Here, a bear trap occurred, and novice traders who entered long positions immediately upon seeing the double bottom formation suffered losses. Now, we should expect the upward breakout of the resistance line that I drew initially. And after a minor retracement, a narrower range has formed. This can be considered as the final stage for us. And this resistance line has been broken, convincing us that the trend has reversed to the upside. From this level, we can anticipate the market to move higher. Consequently, this movement of the index indicates the potential for many stocks of companies included in the market to start an upward movement. Please remember that technical analysis does not guarantee certainty, but it helps us better predict the potential flow that may occur in the future. Now let's examine the movement of the index together. Lastly, let's address an important point. After every successful or unsuccessful trade, it is crucial to review both the correct and incorrect aspects of your trades. Each analysis you conduct will help you become more successful in your future trades. For example, in this analysis, let's assume we entered a long position. If we had placed a stop loss just slightly below the support line we drew, we would have incurred losses when the market tested below that support line again. In general, a majority of traders tend to choose stop-loss levels that are too close, succumbing to their emotions. However, if in this trade we had placed an ideal stop-loss just below the low of the previous bottom, It could have led to a significant profit. The levels of risk and reward should be determined entirely based on the trader's preference. But aiming for a profit ratio lower than 1 to 1.5 risk-reward should be avoided. If a trader frequently closes losing trades with a risk-reward ratio of 1 to 1.5, they should reevaluate their strategy or consider implementing a different approach. Goodbye for now. Take care.